Hi, this is Leslie Boughton, the State Librarian, and I would like to welcome you to this informational session on GASB 54 with Harry Andrews. It won't be necessary for me to make any other introduction of Harry because he's going to do so during his slide presentation. So Harry, thank you very much for being here, and over to you.
Thank you, Leslie. Welcome to all of you out there. I might start off questions. I do have a period at the end for questions, but if there is something very pressing in the middle, please do not hesitate to either type in the question or interrupt me. I can take those questions anytime. First of all, what are we going to cover this afternoon? First, who am I? What is the GASB? Why do they count? What is GASB Statement 54? And what should I do now? First of all, who am I? I'm Harry Andrews, Director of Accounting Services at Laramie County Community College. I've been in that position approximately 3 years. I'm a licensed CPA from the state of Colorado. I'm presently not licensed in Wyoming. So what does that mean? I do not have an opinion in Wyoming, but I will give you my interpretation of how I see GASB 34. And maybe to give you a little of my history, you'll know where my interpretation might be coming from. Before I came to LCCC, I was the county administrator controller for Alamosa County in southern Colorado for approximately 15 years. Not many counties in Wyoming use the county manager, county administrator form, but it's pretty prevalent in Colorado, and it just means that I was chief appointed officer for the commissioners and worked directly for the commissioners. Before that, I was an auditor for a regional CPA firm that covered the 6 counties of the San Luis Valley in southern Colorado. We audited cities, counties, special districts, school districts, nonprofits, one of the colleges, and most of the banks. So that's a little of my history. Who is the GASB? Their beginnings can be traced back to 1913 when a lot of cities started wanting to have some conformity in reporting. A handbook of municipal accounting was written by Francis Oakley and the Metz Fund, which was one of the large capital funds at that time. In 1927, Lloyd Morey expounded on those definitions with an introduction to governmental accounting. He defined the difference between governments and business and gave us a lot of the groundwork that we presently have. In 1934, the Municipal Finance Officers Association formed a committee to kind of formalize all of these standards, and that committee was the National Committee of Municipal Accounting. Those standards stayed in place for quite a long time until 1968, and the MFOA morphed itself into the GFOA, which many of you may have heard of. It's the Government Finance Officers Association. And consequently, the committee morphed itself from the municipal accounting to governmental accounting, so they would be the National Committee of Governmental Accounting, or the NCGA, and you may hear that later. In 1984, the FAF, Financial Accounting Foundation, was overseeing a body called FASB, or Financial Accounting Standards Board. They were setting the standards for the business community at that time. And in 1984, they decided to form the GASB, which is Governmental Accounting Standard Board, because of the differences between government and business. This would allow broad input, not only from governmental units, but all of those that are inputted into this system and want reports out of it. It is recognized as a standard setting board by the state and local governments, accounting industry, and the capital market. It has issued 56 official statements to date. I would like to reiterate, it's not federal. The establishment of accounting standards by local government is a power retained by the states. If you remember your classes in government, the federal government is only allowed power that the states have given them, and the states have kept that power of setting standards for governmental accounting at the state level, so it's not federal. So how does the GASB define itself? GASB is an independent organization that establishes and improves standards of accounting and financial reporting for U.S. state and local governments, established in 1984 by an agreement of the Financial Accounting Foundation and 10 national associations of state and local government officials. The GASB is recognized by governments, the accounting industry, and the capital markets as the official source of generally accepted accounting principles, or GAAP, and you'll hear GAAP again later on, for state and local governments. Funding for the GASB comes in part from the sale of its publications, in part from state and local governments and the municipal bond community. It sets its standards by first appointing an advisory task force of outside experts. It studies existing literature on the subject and conducts or commissions additional research if necessary. Publishes a discussion document for public comment setting forth the issues and concerns being addressed and possible solutions. It broadly distributes the exposure draft for public comment and also conducts public hearing and forums on this document. After all of that process, then it issues the official statement. Why does the GASB count? First and foremost, trust. Who are the primary users of the information that we report? They are citizens and citizens groups, federal, state, county, and local legislative and oversight officials, creditors, and persons involved in the municipal bond industry. Each of you listening today is charged in some manner to be accountable and serve as stewards of public resources. Our economy, along with local and state governments, will not thrive or even function without trust in business, trust in government, trust in the markets. I think this last year has demonstrated how important the trust in markets and government can be. The two organizations for which the FAF has oversight, the FASB and the GASB, have the responsibility to set unbiased financial reporting standards for both the public and private sectors. Only standards developed through the independent process, one that encourages input from all interested and affected individuals and organizations, will lead to the transparent, confidence-inspiring financial reporting that provides trustworthy information to investors and citizens. Without the FAF protective role, accounting standards would more likely be biased by special interests and undermine taxpayer and investor confidence. In short, the GASB standards help government officials demonstrate to their constituents their accountability and stewardship over public resources. Secondly, why does GASB count? GAAP. The GASB standards are not federal law, as stated before, or regulations. The organization does not have enforcement authority. Compliance with GASB standards, however, is enforced through the laws of individual states, through the audit process, when the auditor renders opinions on the fairness of financial statement presentations in conformity with GAAP. Wyoming has such language in its laws and regulations. So, What is this GASB Statement 54? First and foremost, I must say it's for external reporting purposes. This is not an internal accounting or reporting statement. It is for external reporting only. This statement establishes fund balance classifications that comprise a hierarchy based primarily on the extent to which a government is bound to observe constraints imposed upon the use of their resources reported in governmental funds. First, a couple of things in that statement. Fund balance, many of you may know, simply assets less liability. If you will, it's the bottom line, what's left over. Second part of governmental funds. Governmental funds include the general fund, special revenue funds, which many of you in the library business are a part of, capital funds, debt service funds, and permanent funds, or sometimes called endowment funds. GASB 54 mostly addresses general and special revenue funds. There's little or no mention of capital, debt service, or permanent funds. Government funds do not include proprietary funds such as enterprise, say water, sewer, that type of thing that is more business-like, or fiduciary funds, which are agency funds held by others. So how is fund balance presently reported? In our structure of fund balance, it is either reserved or unreserved. Reserved is those funds that are restricted by outside sources, and unreserved is everything else. We can designate them by the board or whoever for specific purposes, but basically we have reserved and unreserved. And the focus of this reporting has been on appropriation or budgeting. The project for GASB 34 was started to reconcile the difference in definitions between reserved and unreserved that's used in fund accounting, and restricted and unrestricted definitions that are used in the government-wide reporting under GASB 34. So trying to find a difference or redefine the definitions, they came across these 5 definitions that are now part of GASB 34. Non-spendable, restricted, committed, assigned, unassigned. The focus shifts from the funds available for appropriation or a budget type focus to one that shows the government's constraint imposed by the either outside or inside limitations on their resources. Let's look at some of the how each of these phases are defined, and they are defined on the relative strengths of the constraints that control how the specific amounts can be spent. First, unspendable is pretty much what it says. They're not spendable. They're not in a spendable form, such as book collections or fixed assets, that type of stuff, or they're required to stay intact, such as principal of the endowment funds. Restricted are amounts that can be spent only for specific purposes stipulated by an external resource provider, for example, grant providers. Constitutionally or through enabling legislation, that is, if the Wyoming legislature creates a new revenue source and restricts its use. Effectively, restrictions may be changed or lifted only with the consent of the resource providers. Again, external. Committed include amounts that can be for specific purposes determined by formal action of the government's highest level of decision-making authority. Commitments may be changed or lifted only by the government taking the same formal action that it imposed to constraint originally. This is a restricted fund, except it's internally generated instead of externally. Assigned funds are amounts intended to be used by the government for a specific purpose. Intent can be expressed by the governing body or by an official or body to which the governing body delegates the authority. In governmental funds other than general fund, and I should say special revenue funds, which most of you are, the assigned fund balance represents the amount that is not restricted or committed. It indicates that the resources in the special revenue funds are, at minimum, intended to be used for the purpose of that fund. Unassigned would be almost always only for general fund purposes. It includes all those amounts that are not assigned to the other purposes. The only time it would be in a special revenue fund is if you have a deficit fund balance and you overspent your committed or restricted, then it would be reported as unassigned. But all positive unassigned amounts will be reported only in the general fund. The second part of GASB 34 kind of is not right out in front, but it kind of sneaks in the back door, and it redefines the special revenue funds. Presently, special revenue funds are defined to account for the proceeds of specific revenue sources other than trusts for individuals, private organizations, or other governments, or for major capital projects that are legally restricted to expenditure for specific purposes. This definition has been in effect since the NCGA Statement Number 1 in 1968, if you remember back when this was all formed. This definition has been in effect since then. Problems they found with this definition is what is legally restricted, and also the interpretations by some of the governments. Governments frequently have used the special revenue funds to account for resources that are not a product of a particular revenue source, such as general fund monies that are earmarked for other purposes. Some governments have used the special revenue funds to account for stabilization arrangement. That's your new buzzword for today, stabilization arrangements, formerly known as contingency funds or rainy day funds. Or governments have used special revenue funds to simply stick money away for a time that's coming up and they might need it later. So they've changed the definition to kind of help clarify some of these. And the new GASB 54 special revenue definition is: special revenue funds are used to account for and report the proceeds of specific revenue sources that are restricted or committed to expenditure for specific purposes other than debt service or capital projects. This has helped clarify a few items. First, it states that the foundation of each special revenue fund must be a specific revenue source for a specific purpose. Additional resources or funds could supplement those revenues, but the foundational revenue source must remain a substantial portion of the fund inflow. The new definition clarifies that the use of the special revenue fund is appropriate not just for externally enforceable restriction, but also for certain self-imposed limitations, such as committed resources. And thirdly, a stabilization agreement does in fact meet the test of being limited for a specific purpose, but for the most part will not qualify for reporting in a special revenue fund, mainly for the lack of a specific revenue source. Governments will have to evaluate their use of special revenue funds. Many special revenue funds have not been reported correctly in the past. Those funds that do not make the cut will most likely need to be reported as general fund. Let me reiterate, though, that this statement is for external reporting purposes only. Internal or management accounting or reporting is not subject to this statement, and that would be entirely up to you how you do it internally, but externally this statement would apply. So what do we do now? I think my first, as being a CPA, I would say contact your auditor or accounting professional, get their opinion and guidance. Secondly, determine if the fund type as reported in the past is correct according to the new definitions of GASB. I think all governments will be rethinking and re-examining their use of the different fund types because there's more focus being on the new definitions. Thirdly, the government body needs to enact a fund balance policy that is compliant with GASB 54 and allows correct classification of fund balance components. As you may have picked up, the governing body has a lot more definitions that it needs to come up with under this new statement. Some of the components of a fund balance policy might be establish the order of the expenditure of funds by classification as they become available. For example, do you spend restricted funds first, or do you spend assigned funds first? Second, define the specific steps required for the process of committing funds. How is the board going to commit their funds? Thirdly, define the body or persons with authority to express intended uses that result in assigned funds. Whether that's your board retains that or they give that power to somebody else. It needs to be in policy. Another part of the new policy, if a stabilization arrangement is applicable, and I doubt if very many in special revenue funds will have a contingency component, if you will. But if it is applicable, you need to define in specific detail what the resources are committed, the circumstances that define the use of the funds. No longer is emergencies and revenue shortages adequate. You need to specifically outline what the emergency is, what source is going to cover that, and how you're going to replenish that contingency. This arrangement may create a special revenue fund, but most likely would be reported in a general fund as committed. And lastly, probably need a minimum balance policy. More specifically for general fund, but even for the special revenue funds, it's a good idea to have a minimum balance. At what level are you going to decide to do things differently? The appropriate level of the unrestricted fund balance, what should that be maintained at? The circumstances in which unrestricted fund balance can be spent down. How do you spend it down, and at what point do you stop? And if you don't stop at a certain point and you overspent, the policy needs to address how do you replenish the deficit, the efficiencies. That is kind of my overall take of GASB 54. If you have questions or would like to discuss different situations, be happy to at this time.
Well, thank you, Harry. I really appreciate it. I learned quite a bit about GASB 54. It's still all over my head, I think, but that's because I work for the state and don't really need to know this stuff. Because we just push it up to our auditors, and I know that several of our libraries out there, county libraries in particular, have county staff that are going to deal with these regulations, and will be pushing the policies and, in fact, just the forms and how that money needs to be reported back to the county down. And so the actual library board members and business managers need to be aware of GASB 54, but don't necessarily have to take any action. So this is all good stuff, though. Anybody out there on the phone, do you have any questions for Harry?
I have a question. This is Kathy in Sheridan County. And Harry, you may have explained it in accounting terms and went totally over my head. But can you distill down to a layperson how GASB 54, what components of GASB 54 prompted the Campbell County Commissioners to dissolve their boards? What was the funds required? Did they feel like required them to do that? Our commissioners in Sheridan County think it's not necessary.
I don't have specific knowledge on how and why they did that. I can only speculate, and this is strictly from my own personal purview, but I would imagine that the Campbell County people looked at how they were reporting in special revenue funds and decided that maybe this wasn't that first of all, maybe there wasn't a specific revenue source that was committed to that purpose, such as a mill levy that's dedicated to that. But I think they probably looked at all of their special revenue funds and decided maybe this wasn't defined as a special revenue fund, and they were pulling it back into the general fund. As far as how commissioners and boards and all of that interact, I don't think this has anything to do with that. This is an accounting function that says how do you report what's actually happening to the outside world. Without specifically talking to them and knowing exactly what sources of funds they have, I don't know for sure, but that would be my speculation.
And this is Jamie, and from what I've heard from Patty up in Campbell County, that is pretty much correct. The reasoning behind that was due to the special funds and did not have, and that was all that it had to deal with, and partially because there are no direct mills going directly to the library. There are two questions that came out over chat. Susan Simpson asks, the county would establish these policies, or does the library establish them? And I can answer that from a state library development perspective, saying that your county will tell you how you need to fill out your forms. And if they don't, well, and GASB 54 doesn't go into effect until next July 1. Is that correct, Harry?
That's correct.
Okay.
You can have early implementation, but it's not required to go in effect till after July 1st.
And that will definitely be something that's coming down from your county. How you use your money is how they tell you can use it, and so that's how they just have to report it. And like Harry said several times throughout this presentation, this is only for external reporting. This is only so that all of the government forms and reports out there all read the same, look the same, and you can actually compare apple to apples. The other question we have on text is from Kristen in Carbon County, and she asks she says that her library gets a chunk of money from the county, and is that money assigned, unassigned, or is that something else?
That would be determined by, I would assume, the commissioners who are giving them the chunk of money. If the commission is taking a formal action to commit that money to the library, then it would be committed funds. If they're just letting, say, the financial accounting office assign different amounts to the budget, then it would be an assigned amount. But the county would be the one that drives that, and it has to do with the formal resolution that they have, either they commit it through a formal process or they assign it through an informal process.
Thank you, Harry. It looks like we might have lost our UGMA visual, but that's okay. We will continue here on the phone. Are there other questions?
I have a question. Can you hear me?
Go ahead. Yes, please.
Okay. I'm noticing in my own office, I work for the museum, the Carbon County Museum, and I'm noticing a little bit more refined, upgraded reporting requirement action taking place. It's not a specific question. Is all of this do you see in response to the GASB?
I think that just with all of the happenings of both the business world having in-runs and that type of thing, and you also have governments that are finding little corruptions here and there, I think the demand for not only the citizens but certain federal agencies, and well as if you have any capital debt out there, they're just demanding more compliance with the GASB. I think everybody has always been required to report in accordance with GASB, but sometimes size or materiality, it's not really, you don't get much benefit out of going through all of the process when there's not a big amount of money that's at stake, if you will. And when I worked in the San Luis Valley, we had many organizations that were one-person shops, and to go through the expense of doing everything that needs to be done would have put everybody out of business almost. So you kind of have to weigh the benefit and the cost of the reporting. But I think there's outside demands that are demanding more formal that is driving this.
Yes, that's okay. Thank you for that.
There are other questions? Oh, go ahead.
This is Lucy. I have a question. If it is determined that the library board needs to establish these requirements of a fund balance policy, are there model policies out there someplace that you can hijack and tweak to fit your particular situation?
I haven't seen them yet, but I would imagine that the GASB will be issuing those pretty quickly.
So they'll come, if we keep checking the GASB website, we should find something?
Yes, they usually, after an official statement is issued, then they usually put out guidelines not too long after that. And
okay, thank you.
We also have another text chat, and this is again from Kristen, and she says that she's looking through the 70-page auditor report, and she doesn't see any of the money assigned as restricted, committed, etc. Is this something that the county is going to have to start to do in the near future, or is this something that the auditors are going to have to do?
You won't see it in audits presently because they're operating under the old definitions presently. So you probably will see, you're probably looking at a government-wide thing, so you'll see restricted and unrestricted language in there. But in the future, the new definitions and new names will appear in those reports, and it's going to be the county or the whoever's the reporting entity to classify these. That's not to say that the auditors can't help you along, but the financial statements are the responsibility of management. So the auditors cannot come in and do your financial statements for you, but they can help you along. But it will be the whether you're a special district or you're part of the county, whoever is in charge of reporting, it will be their duty to do the classifications.
And the other question is, how do the non-accounting folks keep up with GASB?
I'm not sure. It's hard enough for us that understand accounting garbly good to keep up with the GASB, but probably the best site is the GASB website. They have exposure drafts that are coming out. If you read the exposure drafts, it kind of gives you a history of why they're doing things and what are the problems and what are the concerns. And they will take comments from anybody that's willing to give it to them. They will take the comments either to change or redefine or whatever it is. But probably GASB's site is the best that I know of.
Harry, I'd like to thank you for coming to share with us and telling us all about GASB 54 and hopefully enlightening us, and for most of us, reminding us why exactly we didn't become accountants in the first place. If you have any other questions after this webinar or in the future, please give me an email here at the State Library. That'd be Jamie Marcus, or here's Harry Andrews' information right here on the screen. And I know that he'd be more than willing to answer your questions, knowing full well that since he's not licensed in Wyoming, he can tell you whatever he wants. So thank you, everyone. I hope you've enjoyed our presentation.